Welcome back to another video. Today we're talking about the Southern California housing market and how it is shifting as we enter the second half of the year. Demand is starting to fall, more price reductions are happening, homes are sitting on the market for longer, and as you can see on my platform, I'm tracking market demand across all of these cities, and we're starting to see a lot more red show up versus the amount of green that's in the market. As you can see, green is high demand, blue is balanced, red is low demand. So we'll dive into some of these cities, some of these counties, and kind of see exactly what is going on. If you're interested in checking out this platform, link is in the description below or on my main page. It's called themarketvector.com. It's a platform I created tracking 5 counties across Southern California, basically every single housing market data point that you can think of is being tracked on this website. You can also get reports sent to you every month. Type in a city, type in a county, or you can just download it for yourself. And every month when I update the data, this will automatically be sent to your inbox, as many cities and counties that you are interested in. So let's take a look at some of these cities that are showing up red, and this has been a shift from a year ago. Right away, Rancho Santa Margarita ranked the safest city last year in the entire state of California, has some incredible public schools. As you can see, community, 10 out of 10 for schools, violent crime rate low, property crime rate low, unemployment rate low. But what's happening here? The market has shifted. Even though the median sales price is up from a year ago, we're seeing demand fall. Days on market up 34% from last year. Homes sold down almost 16% year over year, while active listings are down 15% year over year. So this platform is really good at tracking the shifts that are happening in the market. Because even though the median sales price is up year over year, you're immediately starting to see that Rancho Santa Margarita, what used to be an extremely hot seller's market, is shifting right in front of our eyes and likely continue shifting into the second half of the year. Almost 26% of all homes listed are having price reductions. Listings for rent are up 61% from last year, while the median rent is down 17% year over year. Investor purchases, only 8% of this market, very low compared to a lot of other areas in Southern California. So we can also take a look at some graphs for this city, Rancho Santa Margarita. By the way, I will check out some other cities in different counties as well. So median sales price is up. Active listings is actually down compared to a year ago, while homes sold also down compared to a year ago. And this is a very slight downtrend. If I take a 3-month average, you can see the number of homes sold has actually kind of been declining a little bit. In July of last year, 50 homes were sold, and right now 39. So demand is declining in this city. If we look at pending sales, which is number of homes in escrow, this is falling off a cliff as we enter the second half of the year. So although Rancho Santa Margarita was a very hot seller's market, right now, according to the data, that is shifting. So we could potentially start to see more price reductions in the second half of the year, homes sitting on the market for longer across all of these cities that are labeled in red, by the way, and number of homes sold continuing to decline. Days on market already up 34% year over year. Another one, Long Beach. So median sales price hasn't really changed year over year, but demand is down 32%. Interesting, homes sold is actually up 4%. Days on market hasn't changed. Active listings down 7% year over year. So you're starting to see a little bit of a trend in these lower demand markets. Active listings down, pending sales down. Very interesting to see this kind of activity. Investor purchases, a pretty popular market for rental properties, and listings for rent up 5%, median rent roughly the same since a year ago. There is a little bit of foreclosure activity in this city. By the way, this is a new set of data that I'm tracking on my platform, is distressed inventory. Pretty important to know whichever market you're looking in. Places like Los Angeles probably has a little bit of a higher distressed inventory, 240 foreclosure filings, 45 bank-owned homes in the market right now. LA, another low demand market. Median sales price down 12% year over year. Active listings down, pending sales down, days on market roughly the same. Interesting, homes sold is actually up 15% year over year. So this could be one of those markets. By the way, LA has been a low demand market for about 4 years. Home values haven't changed at all in the last 4 years. We'll show that on a graph. Just quickly, I did make a completely separate video on Los Angeles, so I won't touch on this too much. You can check that out in the description in my on my website. So if we look at the median sales price in May of 2022, it was $1,150,000. Now it's $1,140,000. So prices haven't changed at all in LA for the last 4 years, but potentially because homes sold is actually up compared to last year, year before, and the year before that, maybe we're starting to see a little bit of a shift in the LA housing market. Again, all of these data points get updated every single month, so you can start to see the shifts that are happening. So when we see active listings down, homes sold up, potentially LA could be shifting next year, finally get out of that low demand territory and maybe more toward a balanced market. Let's take a look at some other areas. Rancho Palos Verdes. Oops, that's Rolling Hills. Rancho Palos Verdes. Even though the median sales price is up, this could be one of those markets that are entering into low demand. Pending sales down 57% year over year. Let's head into San Diego County. Take a look at San Diego, which is a balanced market. Median sales price up 7% year over year. Active listings down 20%. Even though pending sales are up, homes sold are up, days on market is the same. So this is a market that, in my opinion, prices are likely going to appreciate in the near future. When you see supply decreasing, demand increasing, obviously that's going to result in home values going up as well. And we can see 25% of this market are cash purchases. 27% of this market are investor purchases. Investor buying pressure far outweighs the investors that are selling. Foreclosure filings, almost non-existent. That's kind of what you want to see in a market where you're thinking of buying. There's a lot of wealthy individuals buying here. As you can see, a median sales price of $1 million, and 25% of this market is being purchased in cash. A lot of these metrics are important when you're determining where you want to buy a home. Irvine, what was once the hottest selling market in the entire state of California. Median sales price hasn't changed. Active listings are down 10%. Demand is down 15%. Interestingly, homes sold is up 19%. Days on market up slightly. In my opinion, Irvine, for the last couple of years, has been relatively slow. In 2024, it was the hottest selling market in the entire country. We could potentially start to see a shift into more of a balanced, high demand market if things start to continue in this direction. Homes sold being up 20% year over year is pretty significant when you consider active listings are actually down 10% year over year. 26% cash purchases. 27% of this market is having price reductions. Median rent roughly the same, listings for rent down. Investor purchases are only currently making up 10% of this market. Foreclosure filings, non-existent. Irvine, no one is filing for foreclosure here. Economic indicators are pretty important. Obviously, we know one of the reasons Irvine has been so popular is for school and crime rate. Unemployment rate low, median household income very high, $130,000 a year. It'd be interesting to see some graphs because I know Irvine has kind of not been doing a whole lot over the last couple of years. Yeah, you can see June 2024, the median sales price here was 1.7 million. Now it's 1.634. So Irvine has been in a low demand market for the last couple of years. So looking at all of these data points, you can really start to see the shift that is happening in the market, in the markets that you're looking in every month. So we can see there was a downtrend here for 2 years. Really, since June of 2024, home values got all the way down to 1.4 million. That's, what is that, a 10% drop in the median home value? That's pretty significant for really any city. And now we're starting to see this price continuing to trend higher. Homes sold is very important. This has been trending up since January. 191 homes sold in the recent month. While active listings, we know, is down from a year ago, but up from the beginning of the year. So you're starting to see inventory increasing, which normally happens in the first half of the year for all markets, and then it starts to trickle down into the end of the year. So that's kind of it for the video. I wanted to point out that Southern California is starting to enter a lower demand market as we approach, the second half of the year, which we're in already. You start to see fewer buyers in the market. Active listings tend to start going down starting in August and September. Demand falls, number of homes sold falls. The amount of homes having a price reduction typically increase into the end of the year. So buyers, depending on which city you're looking in, you could have a lot more negotiating power over the coming months. If you're thinking of selling your home, you want to be mindful of the price. Take a look at the homes that are in your neighborhood. How long are they sitting on the market? Browse the city that you're thinking of selling, buying in on this platform, because you can really get an idea of what to expect in negotiations, whether you're buying or selling. But if you like this video, subscribe for more and check out themarketvector.com. If you want to get monthly reports sent to your inbox, browse any city that you're interested in. You can also take a look at county data, which, for whatever it's worth, could be interesting for you. It compiles every single city in the county and gives you an idea of what's happening in this market. But that's it. I'll see you in my next video.